I got this piece in the Journal today from Druckenmiller and Kevin Warsh on the Fed. Title is Fed Tightening, Not Now. And the quote reads something like this. We believe, if you can, here we go. The U.S. economy can sustain strong performance next year, but it can ill afford a major policy error, either from the Fed or the rest of the administration. Given recent economic and market developments, the Fed should cease for now its double-barreled blitz of higher interest rates and higher and tighter liquidity. They said the time to be more hawkish was earlier in the decade.
And to be fair, I mean, when people say that, well, where were you? Well, he was at Delivering Alpha saying it.
Yeah, he's been talking for some time.
Right, but not now.
Also, the concern, the generational concern as well, has been one of Druckenmiller's big themes, right? About entitlement programs and everything else that is being inherited by the younger generation.
The assault on the Fed is pretty, well, look, I'm waiting for, other than some people in the media, for people to say, you know what, maybe he shouldn't make this one. I think, look, the world's divided between those who say, if he doesn't raised, then he knows something we don't know, and maybe that's why the financials seem to roll over every day.
See, guys, the mainstream media right now is trying to figure out a way to convey to the public that the economy is not as strong as they've been saying. You got to remember, anytime the Fed starts interest rate hike cycles, they usually get to a minimum of 5.5%. We are at 2.25% at this current level. And you're telling me that we can't even get to 2.5 or 2.75 where they're quote unquote neutral rate of 3% and our economy is strong? What they're failing to mention is that our debt levels, our corporate debt levels, our government debt levels, and our personal debt levels have doubled since 2007 and 2008. And those debt levels are due.
And if he does raise, then what does that mean for the remaining companies who have not been hurt by lowered multiples and by worries about earnings? So we're out there, and he's in real jam. And I think that he has to do one, and then say our work is done for now. We've raised and raised and raised and raised. We're not going to need to raise. And even the yield curve and the stock market is telling us that. I think he's very reluctant to rely on market forces. I think what he's looking at, and that's all they're looking at, is employment and wage increases.
Which Warsh argues in this piece with Druckenmiller, that is a lagging indicator. You agree with that?
It is. I mean, it's a very thoughtful op-ed piece, basically saying everything we've been saying pretty much every single day. But at the same time, let's recognize we got China, we've got the Fed, we have slowing earnings, we have so many headwinds, we've got tariffs, and against that, too many people were hired.
Did you guys just hear that? Really? Really? Too many people were hired? This is how they're trying to explain this now. Now, if you guys, aren't privy to this information, the way that employment is calculated is that all you need to do is work 1 hour of a work week and you're considered employed. I don't know about you, but when I go down the street where I live in this current area, I see people homeless all over the street. There are people looking for jobs everywhere. This is absolutely fabrication of information. This is what these people do. Too many people employed is absolutely not the case. The real unemployment rate is not 3.7 or 3.8%.
Too many people were hired.
Meaning
you got 7 million job openings going unfilled.